So, welcome to the oil market update. Prices are down. Brent oil, as we can see here, is trading at 73.74, and just have a look at the daily candle. It's a huge one. Uh, it looks like a bearish Marubozu candlestick formation, and it opened at 78.84 and now trading at 73.70. So it's quite a drop, and it's just somewhat surprising because US, as we just saw here, uh, Market Watch headline reads that oil prices tumbled even after biggest weekly supply drop in nearly 2 years. So ideally, if US has reported a supply drop of highest supply drop in 2 years, then prices should have found bids. Oil prices should have reported big gains, but it's as we just saw on the chart. It's feeling the pull of gravity, and as of now, it appears as though the tide has turned in favor of the bears. I would like to put in some of my favorite moving averages here. So this is what I usually track. These are the Fibonacci exponential moving averages: 8, 13, 21, 34, and 55. And as we can see, the daily candle is trading well below the band of the moving averages, and I usually consider it as a very bearish sign. So it appears that it's a done deal that oil would settle today well below the band of this moving averages, and so from tomorrow onwards it would be a sell on rise trade. So what has exactly happened? Why is oil reporting such sharp losses? So there are two news, which I have here. Is one, you get directly from express.co.uk, and it says that President Trump's top diplomat has hinted that U.S. could grant waivers to some countries, allowing them to continue importing Iranian crude oil even after sanctions are reimposed in November. So earlier it was said that Trump administration had made it clear that it won't grant any relief to any nation, and their main aim is to wipe out the Iranian supplies from the market. And so the oil market, which is already experiencing tighter supply conditions, if Iranian supplies go off the table, it would only bolster the existing tighter conditions, and that is the reason why oil was so solidly bid. But now the Trump is considering uh, backing down on Iran, or as his top diplomat said, that Trump administration may soften its stance when it comes to nations who would approach them for some, what should I say, some relief. They are ready to grant it, as is here, as the line reads here. Secretary of State Mike Pompeo said today there will be a handful of countries that come to United States and ask for relief, and if they do so, we shall consider it. So it's it's a sign that Trump administration is softening its stance, and that could be the reason for that could have added to the that could have overshadowed, or I would say that has likely overshadowed uh, the bullish US oil inventory report, and it's weighing over oil prices heavily. Also, oilprice.com is reporting that Libya has reopened its oil ports. Libya's National Oil Corporation on Wednesday the force majeure on four ports in eastern part of the country after the export terminals were handed over to the Tripoli-based internationally recognized Libyan oil company. So this could have added to the bearish tone around oil prices. But the big news here is Trump administration is willing to talk to countries who approach the US for relief. And so Iranian oil supplies wouldn't drop to zero as it was feared till yesterday. Coming back to charts, as we can see, it's just falling, and the crucial support here, if you can see on the chart here, the crucial support is this support of the falling trend line. It's not actually a falling trend line; it was a falling reversal, which oil prices had breached to the higher side on June 26th, and that trend line now could come into play. It could, maybe it would stall the sell-off for a few hours, but a big support, big chart support is around is at 72.49, which is June 16 low. RSI is biased bearish. It's below 50, and but still holding well above the oversold territory. So there's enough room for a drop to 72.49. As I said a few minutes ago, oil is set to close below the band of the Fibonacci EMAs 8, 13, 21, 34, and 55. And so for me, it's a sell on rise trade from tomorrow. So I would, you know, I would look at the 4 hour chart. The trading strategy is pretty simple here. I would look at the 4 hour chart here, and it shows oversold conditions. The RSI has dipped below 30, and it's reporting oversold conditions for the first time since June 17th. So I suppose we could be in for a minor pullback, a minor rally in the next 24 hours or so, and after that we will. After that, I would try and short oil contracts. So it's a sell and rise trade for me from here, and I would be looking to sell somewhere around. Let me see, maybe around 74.50 or 75. Considering that the earlier 4 hour RSI is reporting oversold conditions, I'm expecting a bounce, and it would likely run into offers around the band of EMAs. And on the downside, I'm looking for a target of 72.49. A violation there, and it would only bolster the already bearish technical setup and could yield a deeper drop to, let's say, the chart shows 71.26 as a strong support. So okay, so for me the downside targets are 72.49 and 71.26, and a daily close below 71.26 would confirm that the oil, a long-term top is in place. So that's my view on oil, and I shall see you tomorrow. Thank you.